Let's get back to the $16 trillion U.S. mortgage market. It's suddenly experiencing its worst turmoil in more than a decade, the epicenter of the last global financial crisis. The upheaval is setting off alarms throughout the investment world. Here with the details is Bloomberg's Dani Burger. Dani, what are you seeing?
And Nara, it's almost unbelievable that yet again the mortgage market is at the center of yet another financial crisis. But this time it's not because these bonds are risky. Instead, because of the coronavirus shutdowns, you all of a sudden have these fears that homeowners and corporations alike can't pay up on their leases. So that means that these bonds have plummeted in price. Yields are skyrocketing. And the real estate investment trusts that own these bonds are all of a sudden facing heavy redemptions from clients. But that's not all. These REITs are also very highly leveraged. They borrow a lot. And the lenders are saying, OK, the value of what you're holding is plummeting so much. I'm going to need more collateral from you. But the issue is that they need the cash to fund this collateral. They go into the market. It's pretty illiquid. We've heard more about these REITs trying to sell off their bonds, but they're very hard to price. So increasingly, we hear more REITs that can't meet margin calls. That includes Invesco, it includes MFA Financial, and we've seen the shares of those REITs absolutely plunge. MSA Financial on Tuesday lost more than 80% of its value. So we're seeing a fire sale from these mortgage holding bonds because they can't meet their margin calls. And again, those fire sales could be ricocheting throughout the financial market. Nara?
Well, Dani, that takes me right to my next question. What possible consequences could we see through the rest of financial markets of this?
Sure. So again, one of the issues here is that liquidity, that grab for cash that we've continued to see. When you have these REITs who need cash to fund those positions, to fund those margin calls, they have to look elsewhere to get it. And that's when we continue to see that liquidity crunch. Again, the mortgage market, it's an important one. It has a lot to do with the repo market, the short-term lending market, and it's hitting broker dealers as well, not just the REITs. So you could say, okay, REITs, they own maybe not that much of that $6 trillion market, but they're so highly leveraged, it's really hitting a lot of the aspect of this bond market.